Right, let's carry on. So there's just this video is literally going to just cover some general issues before we get to looking at sort of the tax points and the sort of actual tax points and things like that. But typically just some paperwork regarding VAT, making it a bit more real. So the whole point of this thing about VAT is that, yes, you register. There are a number of advantages to it, but as soon as you register, you are obliged to, in effect, collect tax on behalf of the government. So in effect, you must charge output tax, sales tax, if you like, on your supplies. Now again, the advantage is, of course, that if you're zero rated, well, you're all right. But otherwise, if you're dealing in standard rated goods, you must put in an extra 20% on your selling price. And then hold that for HMRC. So that's kind of the issue here. I mean, there are advantages, of course, because once you register, you can also claim back, and we'll come to that. But that's the responsibility, if you like, that you didn't have to deal with when you were not registered. So where are we? Quoting, yeah, you also have to put your, if you like, your so to speak, your registration number and files. There's a lot of paperwork, pretty much, and keep records of exactly what's going on. And because you have, I don't know how often, but I remember VAT inspectors going out to visit clients to do their own audit. They probably ask you to just send everything in now. So what are the advantages to voluntary registration? Remember that if you're below the threshold, you don't have to. So in terms of you registering voluntarily, that's because you feel, well, listen, I'm buying a lot of things, I'm paying a lot of VAT for, I can't technically claim this right now because I'm not registered, but as soon as you register, you can claim the input VAT. So probably the biggest reason. And maybe the issue, again, like I say, because of the way the 12 months work and in terms of the historic and the future, you might get into problems with missing the right deadlines. And again, I think I mentioned in an earlier video, it does make you look like a bigger business when you're VAT registered. But there is paperwork. There is just paperwork. You can see here, another disadvantage is you must charge output VAT, which makes your goods, of course, relatively more expensive than an unregistered business for customers who cannot recover the VAT. So there is no problem really for businesses that are recovering if they can recover VAT, but for businesses that can't, they will find your goods just much more expensive. Beneficial, and I highlighted this earlier on, if all you're doing is zero rated, that's great, then that's great. And it's also fine for people who can recover the VAT charge, because it'll be a purchase for them, wouldn't it? And they'll just be able to reclaim the VAT. So it's something to think about when accepting new business and how you manage that in terms of your threshold, because as soon as you accept new business, we saw the earlier example, once you accepted some new business, straight away that took you into the VAT threshold and you had to register. That was something to think about. In terms of being able to go back, you have 4 years. If you bought goods and they're still in your inventory, if they're sitting there, that's fine, you can claim the VAT on that. And for services, you must have supplied the services in the last six months. Of course, it must be for business purposes. That's the whole thing. Right. And then, of course, here we are, this question of groups. There is a convenience with groups. Groups, when we say groups, kind of going back to the whole 50% control, we have scenarios where one member of the whole group can represent the group and, if you like, submit one tax return. So any intra-group, anyway, VAT is not charged on any intra-group transactions, by the way. So one single VAT return is sent in. Although everyone is jointly and severally liable. Now, of course, the advantage is, like I said, there's the admin, and no VAT needs to be kept on any intra-group supplies. The disadvantages, of course, if you like, are that all members are jointly and severely liable, and this is time consuming, and sometimes I think it might be here, maybe if it's not, I'll have to highlight it. Yeah, the other problem is that sometimes you have a group that may be zero rated and can claim back VAT, making taxable purchases, but is zero rated, so they can get their money quite quickly. But suddenly when you mix everything up, it does kind of get lost in it. That's one issue. So members of a group, subsidiaries that can get the money straight away, might not be quite happy with this arrangement. So that's the other issue. That key point here is that everything going into one VAT could be problematic. Everything gets added in together. In terms of deregistration, which is the last bit here, maybe compulsory or voluntary. So a person must deregister when you're no longer making taxable supplies. So when you're making exempt supplies, you should deregister. It's time to go, and you should let HMRC know within 30 days. And again, like I say, it's effective from the date you stop making those taxable supplies. So this is compulsory deregistration, and to do with or your making of taxable supplies. You may voluntarily register if you feel that you're now going to go below the threshold. So in effect, if you know in the next 12 months you will not exceed 83,000. So this is kind of looking forward, but it's not future as we know it. It's just kind of looking in the next 12 months, and you believe that your income will not exceed 83,000, so that's fine. You are free to deregister then. Yeah, so typically when you deregister, work out all your output tax, if you like, on everything that you held, if you like, on the value of non-current assets and inventory held at registration, and you can do your balancing and deduct your input tax, and there we are. So, however, it says here, however, this final tax liability is waived if it's less than £1,000. You don't really get examined on this type of thing, but I think it's just, I mean, it's here. It's good to know. This is what you probably need to just remember, the 83,000. But it's not the working. You don't get examined on that. It's just knowing these numbers. Cool, great stuff. So this was a short video, just getting all that kind of information out of the way. And then in the next video, we will carry on with, where are we? Oh yes, sorry, output. Here we are. Yeah, we'll carry on with we'll deal with VAT on the sale of a business, and we will also carry on with here we are on output VAT in terms of basic tax points and actual tax points. Okay, great stuff. See you in the next video.